Hello, my trading warrior brothers and sisters. Let's have a good week. Hope everyone had a good weekend, recharged, got their battle plans ready for the week. I want to follow up on what we were talking about last week with a potential high setting up in the stock market led by Russell. So Russell really got going to the downside last week when S&Ps and NASDAQ came off a bit. And then we had the rally to new highs in the S&Ps. And here you go. New highs on Friday, and NASDAQ finally making a new high today. But the point I want to stress, and the Dow Jones, I don't know if it's going to make a new high yet, but the point I want to make in the Russell is that we have a failing rally in the Russell. So the Russell's ahead of the other indexes. They're a bit fragmented. And now Russell is most likely about to start wave 3 to the downside or finish off the first wave with a 5. I know enough about Elliott Wave to be dangerous, but to me, this is a failing rally. And I believe within the next 5 to 10 trading days, you're going to see some reversal action in both NASDAQ and S&Ps. S&Ps came in lower today with NASDAQ higher. So S&Ps took care of that business Friday. NASDAQ's doing it today. Also, there's a story that is very underreported that people should take a look at. And it came to me through my intelligence gathering that Wells Fargo has pulled all unsecured credit lines because I guess they don't meet the regulations. Maybe it's Dodd-Frank, it could be that, but that's how it started in '08 was the pulling of credit lines from Washington Mutual. I'm not saying it's a housing problem. I'm saying it could be a financial banking issue, especially if it begins to spread. I live out here on the West Coast, and Wells Fargo is a major bank, nationally, but especially regionally here. And if I was a small businessman, which I'm a trader and a coach, but if I ran a restaurant or any kind of retail shop, and Wells Fargo gave me revolving credit unsecured, this would definitely put a crimp on what I was able to do as a business. So just something out there in the background that no one's talking about. Really the talk is that U.S. banks did what they had to do after the Great Recession, which really wasn't that great for a lot of people. And they cleaned up their books and they recapitalized, and there shouldn't be any problems. They say that the European banks are where the problem is because all they did was bury that toxic paper. Maybe the same thing, and the narrative about U.S. banks being okay isn't really that true if they have to pull credit lines. Anyway, I wanted to make you aware. I do keep abreast of, even though I'm a technical trader, abreast of what's happening fundamentally. So let's see if that develops into some type of black or gray or blue swan in the days ahead. So I just wanted to show the Russell that now you could put your stops over the high of the move that we had 2 weeks ago. You no longer have to go all the way out to March and have stops over this high. So I'm still looking for a failure. Again, you need closes under 220 for the bears to take control. And now let's move to a couple of the other indexes. First of all, let's take a look at the Dow. After the indexes, we'll get to currencies. So let's look at what the Dow is doing right here. Here we go. The Dow is actually down. So at this point, the Dow still has not made a new high. It's just above the 35,000 level, 35,009. So it could still do so. If not, it could be a fifth wave failure. And now let's get to what's happening today in the S&Ps. So the S&Ps down 3 on the day. And, we did make new highs. I just want to show all the non-confirmations that are happening in the S&Ps up here. As you can see on the daily, the new high yesterday did not take out this 70 RSI reading, so we're diverging on that time frame. Here's the 4 hour. We're diverging on the 4 hour time frame. Here's the 2 hour. We're diverging on the 2 hour time frame. And we could go down the line. Here's the 1 hour still diverging. We could still make new highs here, and even all the way down to the 15-minute. We're not blowing out the divergence. Here's your confirmed high on the 15-minute. So what we're going to need is a weekly signal in the S&Ps, and I'm going to teach you a technique, because this isn't just about analysis. I also want to coach you and teach you some methodologies that are very simple but powerful. Part of it is what I do with RSI and inflection points with 3 drives. But this is a simple method that I learned from a guy out of Naperville, Illinois. His name's Eric Hadick, a newsletter writer for decades. And it's called a 2 close reversal. And what you do is that you just count back 2 weeks. And if you could count to 2, you could do it. You count back 2 weeks, 1, 2. And you look at the close from 2 weeks ago, and that's about 10 days of market memory, because the market memory is always to the left. And for a 2-week reversal, the S&P would have to close under 43.49. Pretty doable, you know. We're only talking about 31 handles or so from where we are now to get a 2-week reversal. So keep that in mind. Now, you don't know if you have a 2-week reversal till the candle is closed on Friday, but there are other ways to use the off number. I'm going to start with just how you know when you have a 2-week reversal. You could also use this on other time frames, like 2-day reversals. You could use it on the 4 hour, but I call it an off number. So we're going to have a 2-week reversal in the S&Ps. Write the number down, 43.49 by Friday's close. We're only 20 handles away now. And I did want to show the NASDAQ here, because the NASDAQ finally made a new high. Here's your 4 hour. Okay, we're getting a little reversal right now. Here you go. See this high? Little pullback, see this high? It's confirmed. So when we had this pullback, I believed, as I taught last week, we had a couple of videos out there on FX Street, and I've been doing this every day for months, that when you have new price highs and a confirming high, which, you know, it may have diverged a little bit from here, but, you know, it was enough to be a confirmed high that I thought we'd have one other high that may or may not confirm. And now we're getting the evidence here. We're getting a lower RSI reading. When you have to look and get the readings, so this actually was a divergence here. But if you have to get the readings on them, I kind of say they don't count, because it has to be glaring. And this is glaring. The reading here up at 76, and the reading here at 64 under 70. So, you know, I'm looking at SQQQ as a, you know, a possible turn. Maybe we're going to have a double bottom. The low today has been 852, which I think took out the lows by a pip. And this is what I call a throwover on a wedge. This is a falling wedge. And, you know, I'm trading the divergences down here, but if you want to be conservative, you wait for closes back inside the wedge, and that would be 917. Something that would be commensurate with the NASDAQ is that if you look at the weekly chart right here, you see this wedge line right here? Okay, it broke above it. It's called a throwover. And if you want to be conservative, you just wait for it to close back under 14.3, which is quite a bit underneath it, for it to be back inside the wedge. And the off number for NASDAQ, if you want to write it down, this week is 14,716, so doable as well, about 130 from here. So looking for a top in NASDAQ. This is my bearish speed line. Most people, even if we get a correction, the first 5–10%, most analysts will say, well, it's just a run-of-the-mill correction, a garden variety correction, and they'll be looking for 10%, but I'm looking for more like 30. And certain stocks will be damaged even more, and I think it happens this summer. And I want to take a look at the VIX because the VIX is forming a pretty nice looking little formation here. It tried to break out last week. Here you go. This is a neckline. And right now, to me, it looks like it's forming a right shoulder. And I talked about these wicks that we had down here weeks prior to the low, which to me smacks of accumulation. I guarantee you could not have gotten a trade off at 1421. So these wicks were a precursor for a potential turn in the VIX, and taking out last week's high of, call it 21, is going to take us up to about 28. So keep an eye on the VIX. The left shoulder got all the way down to 15. So, that is possible. But if you really take a longer term look at the VIX, they say all gaps eventually are filled. Okay, so what we did was we filled the COVID gap here. But we're a lot higher than we were in COVID. We surpassed the COVID highs in every index, and yet we're not trading 12. We're not trading 10. The low trade was 14.5 with the market at new highs. So it's my contention that we're getting a nice low developing here in VIX. Seasonally, August is a very negative month. There are important lows that come in August. In fact, for you market history buffs, the beginning of this prolific generational bull market in equities began in August 1982, around the 760 level in the Dow. So, we're talking about a 40-year bull market with some interruptions like the 87 crash and the dot-com bust and the financial crisis in 08. But still in a 40-year bull market. I expect it to last another couple years, but we're going to have a shakeout that I think is going to present one of the best buying opportunities since the COVID crisis, since the COVID crash. So those are my views. I always retain the right to change my mind. In fact, one of my favorite quotes from W.D. Gann is, if you don't learn how to change your mind, you won't have any change left. So I guess we're up to date on the indexes. Just a couple of stocks I want to show you. Apple made a new high for the move. I was expecting it. I just want to show you, as great as it looks here, look at the weekly. This is a classic 3-drive pattern. Here's drive 1 with a confirmed high. Here's drive 2 up here, where it diverged under 70. And now we're working on drive 3 up here, and the RSI is still below 70. So this is a potential major reversal formation. It says that if we could get a nice correction and break under 124, that $70–$80 Apple, that's cutting it in half as possible. Also, there was a big conference in Idaho, the Allen Conference, where all the tech billionaires, before they got in their spaceships, got together to meet. And one of the guys that I interview is Charlie Gasparino. He's on Fox Business News. He's a reporter also for the New York Post. And he wrote an article that the mood wasn't so great. They really weren't granting interviews. They weren't there to talk about mergers and acquisitions. That the number one thing that was on their mind that kind of soured their mood, and they really didn't want to make statements to the press. They were avoiding the press. Is one word: antitrust. And President Biden signed a executive order last week that the market right now is just ignoring and doesn't think it's going to turn into much. But a lot of these guys that were there seem a bit concerned. In fact, it was reported a few weeks ago that Apple's CEO, Tim Cook, actually called Nancy Pelosi being concerned about antitrust. So these billionaires aren't real happy that lowly bureaucrats making that are thousandaires, not billionaires, not they're not millionaires, could disrupt their empires. So that was happening there. If you can count on anything to disrupt the bull market, it would be government intervention, antitrust. Unlike the Fed, they could muck up the works here. So I think that is a risk going forward in the FANG stocks, and that's why my preferred short is in NASDAQ. Also, something they talk about that tech stocks don't like are higher yields. I don't think that's going to be a problem. As you can see, the 10, at least for now, the 10-year went to my speed line target, actually poked through it at 125 and it's trying to make a recovery here. I had a lot of conviction we pulled back down towards 120. There are people thinking that we could still trade 110. If we get some risk off, that could be a sign of lower yields to come. But when you look at where yields have come from, all the way back at the 50 BIP level, if I go the weekly, then what you're getting right now in yields is simply a correction of this huge move of tripling of rates over the last year or so. So I do believe eventually we're going to have sharper, higher yields. The question is, are we at the lows yet? It's 50-50 for me. So I wanted to show you Apple because of the NASDAQ, and I also want to show you another part of the NASDAQ 100 that may be giving signals of being close to over, and I don't think it would be affected by anything in antitrust, but I wanted to show you Microsoft. So here's Microsoft right up against my wedge line. Here's a daily, you could see it a little clearer. Here we did have a confirmed high, but again, another three drive pattern developing here. So we have confirmation here on the daily, but if you go to some other time frames, if we make a new high now, look, we're testing the underside of it, we would diverge. So there's Microsoft part of that. I think what also with Elon Musk having a, uh, really wasn't Elon, the space flight was Richard Branson. But Tesla is also in a big, I know it sounds like a stock show instead of an FX show, but this too, unless we break over 690, is in a descending triangle. It actually measures all the way down here. So be careful. It will be okay to drive Tesla on a breakdown as long as the car doesn't break down. But you start trading 550 in Tesla, there's problems in River City. Okay, so let's get to some of the other outside markets. I came in thinking I was going to be selling strength in euro and cable and everything, and instead it came in higher. But one of the other ingredients has been what's been happening in energy, the WTI, and I do believe we put in a high last week after the OPEC meeting up here. I believe it was Monday night. And I'm looking at this as a potential failing rally. So short here from, if you come to TradeGate Hub, you would have seen the post last night to sell crude here with stops over the high of the move. Already have a $1.10 on it. I'm a big believer, And this is something else as your trading coach and mentors that you need to write down. Always take partial profits. Okay, it's a very important part of money management. So I took half off, and then you want to eliminate risk as soon as possible. I didn't want to get out of all of it in case we really get some type of move to the downside and we get some acceleration. But you take half, you move your stops down to break even, and the worst case scenario is you make money. Okay, so now have stops at BE. Okay, so let's get to the currencies. You know, the dollar I talked about when we were here uh, last week that there would be one more high. I was talking about 92.90, if you guys recall, and we got to 92.84, close enough for government work. And if you remember, I was showing the euro at new lows are getting ready to press to new lows right here. It was down here. But my preferred short that, I was using the correlation between euro and Swiss. And I was saying euro's making new lows. You could go back and check the video, but the US dollar Swiss is struggling to make new highs. And I thought we'd get a third drive up here. So I'm not going to revise my calls. If I missed it, I missed it. I had sells in at 92.85. And then by the time I woke up in the morning, this break had already occurred. So um, the Swiss, I think, is acting much weaker. And this was only going to be counter trend. And I think there could be another wave left to the downside, and euro might have a chance to maybe rally back towards 1930. So the way I'm approaching it is I'm short the Dixie right here. Stops over 92.60. I have my stops here, and I'm looking for the potential of a break back down towards this 91.40 level. And that's where I do believe this correction will end. Okay. So right now it's a scalp. As you guys know from listening to me, I'm a longer term bull. I'm a longer term bull in the dollar. Still think we're headed towards 95, 96. So anytime I'm trading the short side of the dollar, it's counter trend. So just something I want to show you. Um, I would love to be able to sell the pound up here around this 140 level, 139.80, 140 later in the week. I'll be covering my short dollars if that happens. I also thought I'd have a chance to sell the gold up here with some type of a third drive, but the metals are breaking down. Um, Silver is holding up a little better than gold, but it looks like gold's breaking down. I was looking for maybe one more push up towards 1820. Uh, Even the dollar coming off a little bit isn't really helping. US dollar yen, last week I talked about the shorts. I'd be looking for short positions up here, maybe around, we're right at this breakdown at 1030. I may be looking for a shorting opportunity up around the 110.60 level, some type of fib retracement. I think that there's a possibility after what we saw on this initial break for us to trade back down and see a 108 or 107 handle. So I'm stalking shorts in the yen that come in right around 25, 30 pips higher. And that should work if the dollar weakens a bit more. Aussie put in a nice, here's another example of a three drive. You never know how much it's going to give you, but check it out. Here's one, here's two, higher RSI, and here was last week's low, higher RSI, and the Aussie is trying to turn up. I'm short the dollar, so I wouldn't be surprised to see um, Aussie, if it gets back up towards 76, 76.20, which is, 140 pips from here, I'd be a seller up there. And I want to wrap it with NASDAQ coming off pretty good now. So one thing I was talking about, there's never anything wrong. It's not a profit till you take it. And there's nothing wrong with taking something off the table. And I'm even talking about, retirement accounts, 401ks. A lot of people have a lot of exposure to stocks right now. And if I'm halfway right, you could all redeploy that cash after the fact. So be careful with your long equity positions. It's a very crowded trade. Everyone thinks the Fed has their back. And in fact, I talked to a guy, Harold Malgrim, who has served under 4 presidential administrations. And he seems to believe that, and I've seen it before, the only way that you could really get Congress to act together is to get their constituents calling up about their 401ks and their stock portfolios under pressure. So it's very possible that we can get an engineered type decline where the Fed backs off. And, Powell is up for renomination in November, and my sources are saying that he will be replaced. And I think my source thinks it's going to be Brainerd, who has a very close relationship with Yellen. So I think that we'll see what's happening. It would be, if we're down into the fall, Powell could be used as a scapegoat for tapering too soon or a misstep, and then they could bring in their easy money person, Brainerd, to print dollars at the speed of light, even faster than Bernanke. So that's going to be a wrap for me for today. Again, uh, looking for the anatomy of a top pick in stock indexes, with Russell being the first domino to fall. I think we may be getting ready to see NASDAQ, which is led all the way up, could end up leading all the way down. It's too early to call, but if we get back inside this wedge line, I'm already positioned. This would be your sell signal back inside the wedge after the throwover is negated. As I end every broadcast, I say, don't just count your pips, don't just count your shares, don't just count your cryptos. And let me give you just a quick look at the cryptos. They're under a lot of pressure today. Here's Bitcoin. I'm looking for new lows at 26,000, looking for this low to be taken out. And Ethereum, we'll see if it could challenge this low. I have a intuition that perhaps Ethereum holds up better than Bitcoin on this last decline. So that's a wrap. Don't just count your pips, count your blessings. See everyone tomorrow. Good hunting.